Köszönöm, most pedig megkérném Nikolay Vassilevet, hogy beszéljen nekünk az ETF-ekről.
Köszönöm. Jó napot kívánok! Mi angolul terveztük a prezentációt, ez mindenkinek megfelel? Jó, ha valakinek muszáj, magyarul is lehet kérdezni. Great. Well, first of all, let me thank our friends and hosts from the Budapest Stock Exchange and also our partners from Keller for the invitation, for the kind invitation to participate at your event and to present what we've done in the last several years and what our plans are. Let's see how this works. Yeah. Because three of us came here by car, we decided to split the presentation in three parts. In the middle of the presentation, I will ask my colleagues Nikolay Vassilev, who is a member of our board of directors and head of operations, and Simeon Todorov, who is a securities trader and is one of the portfolio managers who actually runs the Hungarian fund, to do their part as well. First of all, about our company, I don't expect you to know very much about us. The company is 12 years old. By some measures, we are the largest independent asset management company in Bulgaria. Of course, the Bulgarian market is smaller than the Hungarian market, so the sizes in this part of the world are not enormous. We do several things. We manage 11 ETFs, exchange-traded funds. We'll speak about them today. We also have about 700 individual investment portfolios, so we operate like a small private bank. We run 3 mutual funds for bonds and stocks globally. We have one real estate investment trust listed on the stock exchange. And our next project for next year, which we will speak about at our next event here, will be a global art fund listed on stock exchanges as well. We are based in Bulgaria, but we are a more international company than you would expect. We have clients from 30 countries. These are the States, all of Western Europe, Central Europe, including Hungary, Tokyo, Hong Kong, and Singapore, and Bulgaria, of course, our home market. Ourselves, we invest our clients' money in about 55 countries around the world. Of course, the US market is the biggest, and then a little bit of all the other continents. We are very well connected internationally. We have, for example, 6 international custodian banks around Europe, dozens of brokers, partners, banks, distributors, and so on. Our team, we are 20 people only. However, our colleagues have studied at universities in 11 different countries around the globe. So we are a very diverse team of people. Many people ask us why, well, with this international background, why are all of you based in Bulgaria? And why a smaller country like Bulgaria has created ETFs covering this region? Why hasn't anybody else done it? Well, we think there are good reasons to be based in Bulgaria. Hungary has good taxes, but so does Bulgaria. We have a 0 capital gains tax, which for our industry is excellent. We have a 5% withholding tax on dividends for Bulgarian individuals and none for legal entities. Also, we have a 10% corporate profit tax and a 10% flat personal income tax. So that's good for all of us. Also, we have a big talent pool in Bulgaria. You probably wouldn't expect that. We have more CFA charter holders than Hungary, Romania, Turkey, Greece, than most of the countries in this region. And we also have a similar strong talent pool of Bulgarians working abroad all around the world in this sector, including in Budapest. I saw many names on LinkedIn recently. Also, Bulgaria has low expenses and a good climate as well. Now, a few words about ETFs. A few years ago, probably most of us didn't know what these were. Exchange-traded funds are something which appeared, well, the first one probably appeared 20 years ago, but nobody knew about them. 10 years ago, people started knowing about them, but they really started growing in the last several years. The alternatives are investments in individual stocks that are possible, but not so easy and not so efficient all the time. Also, there are mutual funds which work, but the exchange-traded funds have the best of both. They are funds and they can invest in many things together in a portfolio of instruments, but also they are listed on stock exchanges. So you can buy, let me give you a very exotic example that we've done. Our company decided to invest in Vietnam. We don't know anything about Vietnam, or I've been to Vietnam, but I don't know the name of a single Vietnamese company. I don't know how the currency looks. We know nothing about Vietnam. However, there is an ETF in Europe covering Vietnam, so we say Vietnam is a good country. It will be 100 million people maybe next year. It's growing very, very fast, faster than China, so it's a no-brainer. You just buy the ETF and you wait and you make money. This was our investment logic, and we made money, not a lot, but still it's a good investment. So imagine a Westerner or a Chinese person looking at the map of Eastern Europe. He doesn't even know the names of some of these countries and their capitals and so on. But you can invest in some of these countries within minutes on global stock exchanges without knowing anything about these markets. So we think the ETFs have a lot of advantages these days. Also, there is a big difference. The ETFs, unlike normal stocks, have both a primary and secondary market. I'll speak about that in a few minutes. So far, we've listed our instruments on 3 stock exchanges. Our home market, Sofia, of course. We've listed all the funds on the Frankfurt Stock Exchange or Deutsche Börse, and the first one in London. And our next destination is probably Singapore. Now, why did our not so large company decide to create exchange-traded funds for Central and Eastern Europe? Every time I make such a presentation, I'm scared that the total number of the amount of assets globally might have changed. The last time I checked, the total money in global ETFs is somewhere around 6, maybe up to $7 trillion. Enormous. Next year, that will be even more. I visited several large global ETF operators around the world. They have nice maps of the world on their walls showing what they've done. So they've created funds for North America, South America, Western Europe, Asia, Africa. They have covered Africa, many countries there, and nothing in Eastern Europe. Well, I asked them why. Don't you know there are some big countries there, even Russia, Turkey, and so on? They say, we will never make such granular investments. Well, granular is from chemistry. I know these are some small granules, are some very small things. So for them, the Czech Republic is granular. Well, that's excellent. For us, it's great. So we decided to be faster than them and create 11 funds for these 11 countries. And in most of these countries, I'll show you a map in a minute, we are the only ETF providers in the world. Well, just nobody else looks at these markets from the ETF point of view. There are reasons why big names don't care about Eastern Europe. All the countries are small. The markets are small. Liquidity is low. The spreads are large. You have to deal with a bunch of local currencies that you don't know about. The transaction costs are high. Nobody knows the region. So basically, looking from New York, everything out of New York and maybe London starts looking pretty exotic for them. And if we take a big map of the world, we don't have even, so both on the product side and on the operator side, we don't have a lot of competition in this part of the world. We think we might be the most significant ETF operator between Frankfurt to the west and Hong Kong to the east. There are several operators, including here OTP in Hungary, which have created one ETF maybe, or something which is not necessarily an ETF, something similar, one fund, let's say, but nothing of this ambition or size. Okay. The other reasons why we decided to cover the region is that we, being based here, we know the region quite well. We've traveled everywhere. We understand, being Slavs, we understand most of these languages to some extent. We have people who have studied not only in the West and in Asia, but also in Poland, Hungary, Russia, Bulgaria. So we have people with deep local knowledge and connections. We are very well connected with international partners, brokers, foreign exchange banks, custodians, and so on. We have a very special relationship with Keller here, with big plans to conquer the region, some of the neighboring countries. And of course, we know the Budapest Stock Exchange well as well. So we decided to be the first one in the whole region. And because of this, all local stock exchanges know us very well. They invite us to conferences, to events like this one all the time. We cannot even cover all the events because there are so many. And we think in 8 of the 11 countries, we have the only ETF in the world at the moment. And we also decided, because of our international listings in London and Frankfurt so far, we have created good connections for global investors to enter in some of these markets. Now, I will ask my colleagues to speak about a few slides. Simeon?
Thank you, Nikolay. So this is a map that our team at Expat likes quite a lot and is very proud of. And the red you can see all the countries that are covered by our ETFs, from Poland in the north to Greece in the south, 11 in total currently. Also visible are the 3 exchanges on which our ETFs are currently traded. So our ETFs are traded on the Deutsche Börse and Bulgaria Stock Exchange initially. And currently the Bulgarian ETF is also traded on the London Stock Exchange. Up there in the yellow color, there is a hint to the future development of our project, for which we will speak in a minute. So there is some additional identifying information regarding our ETFs. From the left are all the countries covered, as well as the full names of the funds. The indices are also there, so everywhere we've chosen to replicate with our ETFs the main blue chip indices calculated by the local stock exchanges, due to the fact that they're most recognizable by the local investment community. So those are the WIG 20 on the Warsaw Stock Exchange, PX on Prague, Books here in Budapest, BET on the Bucharest Stock Exchange, and so on. Also at the right are the tickers of the funds, through which they can be easily accessible on trading platforms or informational platforms as well. Now I would like to walk you through some of the main characteristics of our ETFs. Firstly, they're UCITS compliant, which makes them investable for European institutional investors, as well as makes them recognizable for globally, basically. They're passive, so there is no active management involved, no stock picking, nor market timing. Obviously, they're equity index trackers, so that makes it easy to understand their investment mandate, as well as to evaluate their performance. Something important is that they're open-ended, so they can grow or shrink on a daily basis through the primary market. This in reality adds to the liquidity of the product, so it improves it on a daily basis. The replication method we've decided to use is the direct physical replication, actually full physical replication, which means that our ETFs invest directly and physically hold the underlying shares that make the indices. And we hold them in separate custody accounts. The only difference, they also invest in all the constituents of the particular indices. The only exception is the Greek ETF, which, due to the large number of stocks in it, there we use the sample physical replication. Yeah, so that's the only difference. The ETFs themselves don't distribute dividends, meaning that once they received any dividends from the underlying stocks, which the fund invests in, they is not distributed to the investors of the ETFs. Rather, they reinvest, and so that increases the net asset value of the funds. Lastly, our ETFs do not hedge the risk exposure, and since they're all traded in euro, basically for all the countries that have their own currencies, which are not pegged to the euro, investors in the ETFs obtain exposure to the currency of the particular country. Yeah. So what makes Expat's ETFs unique? Well, first of all, in 8 of the 11 countries that we cover currently, there are no similar products, exactly the same products, I mean. So we're the only ones in those 8 countries. Also, our ETFs are designed to be highways of capital flows from and to the capital markets in Central and Eastern Europe, and they link the CE countries with the stock exchanges of London and Frankfurt. So they provide a very easy and effective way for international institutional investors to obtain and close their exposure to these markets, and importantly, they provide country-specific exposure. There are also other issues that are resolved by our products. For example, the lack of liquidity, lack of access. Also, we've experienced a lot of issues in the region with cross-border settlement. Also, everyone knows that the transaction costs in the region are relatively high. So all these typical factors in investing in Central and Eastern Europe can be solved by our ETFs. So also our ETFs provide the opportunity to undertake a very, very obvious and easy to follow macro-based strategy. So that eliminates the need to provide resources for analyzing and researching the particular companies, which could be very, very consuming in terms of all kinds of resources. So also they're very transparent, since the information, for example, for their portfolios or net asset value are published on our website on daily basis, as well as many other informational platforms. Obviously, they provide some diversification benefits, since most of the indices that we cover are quite diversified. And also the fact that our ETFs combine primary and secondary market also mean that there is superior liquidity compared to the alternative in investing in those markets. So basically, virtually any amount can be invested with our ETFs every day. And yes, now I'd like to invite my colleague Nikolay Vassilev to continue.
Thank you. Well, there is another reason that we created those ETFs, and it's very important for all investors. It doesn't matter if they are institutional or private investors, and those are the fundamentals. We believe that this region has we're apparently missing a slide or something. Yeah, so we believe that the region is really with high potential. You all know that in Western Europe, the estimated GDP growth for near future is maximum 1.7%. And for our region, it's a little bit more than 3.5%. And the underlying growth is even more robust. And we think that this will translate in higher earnings growth, and we will attract in the long term more foreign investors. Well, emerging Europe is somehow under. it's undercovered by media and analysts. It is undiscovered region for most of the investors, and it is under-owned by institutional investors. You can see that the multiples are pretty low, and we see that in the region there is a high dividend yield and a really stable cash flows. So when we decided to create the ETFs, we got an index, the C-top index, that contains the largest companies from the region. They are from Hungary, Czech Republic, Poland, Romania, Slovenia, and Croatia. And we compared that index with the DAX index. And for the last decade, we saw that the region really underperformed despite its GDP growth. So we took the main indexes of the stock exchanges in the region, and we saw another important indicator. The market cap to GDP is really low compared to even emerging markets, not to mention compared to developed markets. That means that the local markets have a really great potential, and we think that instruments like the ETFs will open the markets, and the international investors will be able to get into the region and get some taste of it. So for the next part, I will invite Nikolay to take over.
Yeah, thank you. Before I forget, we have left some of these handouts and some of our business cards over there, so you can take some on the way out if you want. Let me go back to this chart. This is only one index, which covers just a few of the countries. In our office, we have similar charts for all the 11 countries. So the observations are very interesting. There are two markets in the region that have done relatively well and have underperformed just a little bit the German index for the last decade. These are Hungary and Romania. All the other 9 markets have done not well, which means they're very, very cheap. Even some of the bigger countries like the Czech Republic, Poland, the richer countries like Slovenia, Croatia, they have not realized that the global crisis of 10 years ago has finished. Just if you look at the chart, it has been almost flat for the last 10 years. So I'm not talking about countries like Serbia, Macedonia, Slovakia. There, nobody has realized the crisis is over. They still remember the problems of 10 years ago, while the global markets have boomed in the meantime. So we believe with the existence now of these ETFs, there is a chance that they will wake up. So can the US market double from now on very soon? Well, it can, but will it? Probably not. Can the Hungarian market double? I don't know, probably not. But can the Greek market triple? Can the Macedonian and Serbian market double? Even if they did, they will still look super cheap compared to everything else and compared to their historical performance. So we think there is a lot of value in these countries waiting to be discovered. Now, in the next part, I will explain some of the specifics of investing in these ETFs that might be clear to many of you or not fully. Actually, our experience of talking to institutional investors around the region is that they are not fully aware of these specifics of these new instruments, because they trade a lot of ETFs in global markets, but they only trade on stock exchanges, and they treat them as normal shares, really, while there is more than that with us. So first we'll speak about secondary markets. Secondary markets obviously are stock exchanges. So you can trade our ETFs at the moment on these 3 stock exchanges. In the future there will be more. Someday maybe also the Budapest Stock Exchange will be in the list. Singapore I mentioned. Now on every stock exchange, for every ETF, we have so-called market makers. In Bulgaria we have many market makers. In Frankfurt we have a large German market maker called Lang und Schwarz, and they are market makers for 1,000 and several hundred similar ETFs. In London, our market makers are Stifel. They are a US broker, relatively large, famous in London, not necessarily here, and they decided to be our market maker as well. So the market makers always put buy and sell quotes, but there are other participants and also arbitrageurs, I will call them, who put quotes on all exchanges simultaneously, and sometimes they make money from price fluctuations. We calculate our net asset value just like any mutual fund on a daily basis. It's published. And also, we have a contract with a company called Stocks, which is a daughter company of Deutsche Börse, which calculates many European indices and so on. And they calculate our indicative net asset value for all the funds every minute, and they publish it. So every minute you can check your computer screen, and you can see how all of the local markets and the ETFs are developing. Now, the secondary markets are easy. You don't have to know us at all. We don't have to know you. You can just, from your computer, you can buy Deutsche Bank shares, or you can buy our ETFs, and you can trade them, and that's it. So we just see some flow on the stock exchange, but we don't know necessarily who is buying. Now, the primary market is something else, and it's something very nice also. This works a little bit like a mutual fund. Our ETFs are open-ended, which means that they can grow or shrink on a daily basis. Every day they can grow. If there are inflows, they grow. And we issue or redeem shares every day. We can issue an infinite number of shares. Well, can we issue shares for 1 million euro for each of these markets? Sure. Can we do 10 million? Yes. Can we do 100 million? Well, in Poland we can. In Macedonia, tough. Can we do 1 billion in Poland? Well, tough. So theoretically, we can issue any amount of shares for any of these markets. Who has access to the primary market? These are all institutional investors and professional investors. Can a grandmother buy 2 shares in the primary market? No. She should go to the stock exchange through her broker or bank. The good thing about the primary market is that there are no brokerage fees. And also, investors get a fair price. They always get the price, the net asset value for the closing of the day, which is so it's a secure price. Otherwise, on stock exchanges, you never know. And there is no buy and sell spread. Now, this is the most difficult slide that it's not easy for us to explain. Usually, people look at the size of our ETFs, which is small. The Bulgarian one is, let's say, mid-size, but the others are still small. They look at the trading volumes in London and Frankfurt, and they say, look, but your ETFs are so small. I invest in the Chinese ETF, which is very large. Well, we know that. But then we think these are not the right things to look at. Because now, if you want to buy Deutsche Bank shares, the things you need to know is how big Deutsche Bank is. If it's small, maybe large investors should not invest in it. And if the daily volume in Frankfurt is small, you cannot invest billions if there is no such volume on the stock exchange. But with ETFs, you can. So, but the Bulgarian market is small, much smaller than Hungary. But within one day, we got an inflow of 10 million euro. Can we invest that? Of course we can. We invested everything within 2 days. It was a steep learning experience from us. If we do it now, if we get 10 million today, we can invest it within 1 day. We can do the same with all the big markets. Like in Poland, we can invest dozens of millions within 1 day, regardless of the fact that our ETF is still small. Then next time, our ETF will be bigger, but it's not really the right question to ask. The right question to ask is the invested amount compared to the size of that market. So Poland can accommodate very large amounts. Greece can as well. Slovakia cannot. But then come our other skills. We think we are better than the average foreign investor in having local connections, knowing many of the brokers, the banks, the majority shareholders in many of these companies, or other institutional investors who have these stocks. So we will not get the necessary shares from the daily volume, which could be small. We'll get these shares in blocks from the people that can give them to us, and it works quite well. If you don't believe it, well, I'm not very proud to show you that recently the Bulgarian stock exchange has a very small volume, like several €100,000 per day. That's not a lot. That's just the official volume, of course. However, every time the Bulgarian index rebalances, within one day, we trade about €2 million of shares, worth of shares at very good prices, and we don't have any losses from that. So we can invest any amount at the moment. Now, why are these products potentially good for Hungarian partners? By partners, I mean brokers, asset managers, investors, banks, everybody. Now, if we have Hungarian brokers, and we do, we use them to trade Hungarian stocks. Our books ETF buys and sells Hungarian stocks. So they get brokerage commissions from us. This is a small business, but it's there. Secondly, Hungarian investors, they can be institutions, retail, they can invest themselves. Well, has any of you invested in Serbia by chance? Well, you see my point? Serbia is a big neighbor of yours. Everybody has been to Serbia probably, but it's very possible that some of you don't know the name of even one single Serbian company. That's very possible. And you've never touched Serbian securities in your lives. Well, that's not a surprise, because nobody in Bulgaria has ever had Serbian securities. We might be the first ones. Why? Well, it's probably easier to trade in, I don't know, in Papua New Guinea might be easier, but setting up yourselves in Serbia was very tough. It took us 6 months. Nobody, no international banks, no international custodians care about Serbia. So we set up our ETF. That was the slowest one, 6 months. Now you can go to your screen and you can buy the Serbian ETF within the next 1 minute. And one day, when Serbia starts joining the EU and so on, it will be a good story. So the market can double, and we're there. We're waiting for the investment flows to come. We are set up. So you can make investment income. Secondly, now if we have partners who bring us clients, they can make money several times over. Like, their clients might decide to sell some of their current securities to get some cash. They get a brokerage commission. They decide to switch into our ETFs. They pay their broker a brokerage commission. The broker is also our distribution agent or partner. They decide to subscribe our ETF maybe on the primary market. We give them very generous subscription fees, so distribution fees. So our partners in many of these markets make more money than us. To give you one example, we had a very nice market opening ceremony on the London Stock Exchange two weeks ago with the CEO of the London Stock Exchange. They were very generous with us. We had a big presentation, a big cocktail party, and so on. And after that event, we got our first large international institutional investor interested in one of our funds. As a trial, we expect them to invest €1 million within days, and then if they like it, they will continue with the other funds. So the distributor who found them and brought them to us will make more money immediately than we will make in the next years, because this is how it works. We get a lot of technical questions like, how well can our ETFs track the relevant indices? We can only publish information about the Bulgarian fund because it's the oldest one and the biggest one. All the others are brand new, and there is no meaningful comparison yet. So we've done, well, it's not excellent because our fund has actually a little bit underperformed the index by about 2% for 1.5 years. And the majority of that is our management fee of 1% per year. Well, we cannot possibly bring it down to 0. That's mathematically impossible. But we've done pretty well. Well, for the S&P 500, this would be a disastrous chart. They would not have business because they need to bring it down to 0. We cannot do it in emerging markets. In Macedonia, good luck. If you can do it, nobody can do it. So we're confident that we can do it for all of these markets better than any individual or a foreign institutional investor who doesn't know these markets. The next steps, my colleagues mentioned, we're looking at the 3 Baltics. And I think I will stop here. Fine. Thank you very much for your attention.
Thanks for the presentation. Unfortunately, we have run out of time. So, hát ezzel véget is ért az első CEO60 Minute esemény. Köszönjük szépen a figyelmet és a részvételt, előadóinknak pedig köszönjük az előadásokat. És a Bét Akadémiával folytatjuk a következő 1 órában, 4 órától.